Australia might finally be winning its battle against inflation, and the RBA's rate hikes might finally have caused inflation to go down. In the latest monthly CPI reading, headline CPI inflation came in at 5.6% year on year, a dramatic fall from the prior reading of 6.8% and the reading before that of 6.3% year on year. And it isn't just headline inflation. Core inflation, which excludes volatile items such as automotive fuel, well, that came in at 6.4% year on year. That is still far too high, but it was lower than the prior reading of 6.5%, suggesting some progress is being made. However, notably, both of these readings, both headline CPI inflation and core inflation, well, those are still far too high, and they're still well above the RBA's target of 2 to 3%. So the RBA is likely to need to monitor inflation going forward. The RBA might still hike rates by another 25 basis points or so, but it does relieve some of the pressure to dramatically hike rates even higher than the RBA has already done. Now, if we look within the components of inflation, we can see some interesting trends going on. The major things that increased were things such as housing over the last year, non-alcoholic beverages, and furnishings, for example. Now, if we look particularly at housing, we can see some interesting trends. Rents have gone up, and they've gone up around 6 or so% year on year. That, however, is actually quite telling. Firstly, it isn't any worse than headline CPI inflation. So despite all of the cries of landlords price gouging or there being a rental crisis, it doesn't appear that rents have actually gone up worse than everything else. Furthermore, if we look back toward the pandemic era, well, rents actually decreased. And this means they're coming from a relatively low base, and landlords are recovering from that decline. After all, if something goes down 50%, well, it now needs to double to go back to where it was before. If a stock goes down from $10 to $5, well, it now needs to double, go up 100% to go back to the $10 that it was. And this suggests that the rents are increasing, but they're just recovering back toward where they were before the pandemic hit. Now, if we look at some of the factors that went down in this latest reading, well, some of those particularly are things like automotive fuel. Now, that of course is a little bit of a tricky one. It's highly volatile, and that will feed into headline inflation, but not into core inflation, or at least not directly. Now, automotive fuel had actually gone down. That's reflecting a couple of things. It's primarily reflecting what's going on with oil prices. Oil prices have been struggling throughout 2023, and those have really been attenuating. Now, OPEC has tried to cut oil production, which would therefore support oil prices more generally, which would feed into the broader fuel sector. However, those cuts don't seem to have supported oil prices as much as OPEC would have liked. Hence why we're seeing broader declines in oil prices in general, but also in things such as automotive fuel, which to some extent takes the pressure off headline inflation, and that can then feed through into core inflation. After all, if the price of filling up your car with petrol, well, if that's going up, people start to notice inflation more and more, and this therefore causes them to force up wages by more because they are trying to deal with that cost of living pressure. But if fuel prices aren't going up as much, well, then some of that inflationary pressure is relieved from consumers, and therefore you get some fewer price pressures going on. Similarly with companies, if companies need to transport goods, but the transport costs are now going up, well, they're going to try to pass that on as far as possible to consumers. They won't be able to pass on the whole thing, but they'll try to pass on some of those price increases. Hence why when we're seeing commodities, for example, automotive fuel go down, well, that is generally good news for inflation across the spectrum, even if it's only an indirect impact on core inflation. So overall, inflation seems to be showing signs of progress. However, it is too early to say that inflation has gone back down, and gone back down toward target. After all, the RBA's target is 2 to 3%. Inflation is still well above that. There's still some work to be done. Furthermore, if we're seeing headline inflation go down quite a bit because of volatile items, it needs to be seen whether that translates into a long-lasting reduction in inflation that would help to relieve the pressure on the RBA to keep hiking rates. But regardless, this is good news that inflation has gone down. It certainly is better than the alternative of inflation stagnating or potentially going up. Now, as I've indicated, this is good news for interest rates, and the market also responded quite positively with the ASX 200 going up around this time period. The market seemed to be relieved that the RBA might not hike rates by as much as it might otherwise have done. Now, if of course you're looking at investing in the stock market, you need to be rather careful with this. The way I personally do this is I look at analyst forecasts for various individual stocks. I look for stocks that have an analyst forecast that will give at least 10% upside over the next 12 months, so I can get that capital gains tax discount. I also look for dividend yields that are at least adequate, so I can get access to franking credits, which again are advantaged. If you're interested in finding out more about this type of thing, well, premium subscribers to my newsletter can get access to analyst consensus forecasts, which I put out on roughly a monthly basis, which will give you a bedrock to be able to make better informed investment decisions, in addition to doing your own research, in addition to considering your own risk aversion and what is else in your portfolio. But nevertheless, hopefully that's useful to you. You can check that out using the link in the description below. But in any case, thanks a lot for tuning in. I hope this video has been useful and informative to you. If it has, it would be great if you liked the video, and otherwise, don't forget to subscribe to the channel, and hopefully I see you next time as well.